All right. So you guys can see this, right? So like one of the examples that I likely would have given is here. Okay. So you see this massive decrease in open interest. Okay. That's what this is. Now it for whatever reason they put it under the volume indicator, but I'm not looking at volume. I'm literally just looking at the open interest with a line, and it's the black line, and that's the one that's down here. So when you see a massive decrease in open interest, if my memory serves me correct, it is a decrease in short positions. So for example, if you look at this, okay, from March of 2022, we went from like 4,600 all the way down to 3,800 for the S&P. So almost 1,000 points. Decrease in shorts. Okay. Then the market rallies, right? Something like that. So if it were me, man, this bar chart looks horrendous. So this looks way better. You get so used to trading view, you can't use anything else. All right. So if you look at this, okay, right, the market's dropped significantly. I don't know what's on the higher time frame, couldn't tell you, don't know. Massive decrease in shorts, so it looks like short covering down in here. Market rallies, leaves equal lows here on like probably a 1 hour or something. Rallies, sweeps those lows, and then what's it do after it sweeps lows? It takes off to where? A new high, right? So once these lows were swept, on a intraday basis, you could consider going long in the majority of those days in here. Now, yeah, this is hindsight, and you know, we're looking at data that's already happened, but that's essentially how I've used it in the past. And if you have seen a lot of my work, then you would know we've looked at this kind of stuff before. We have some equal highs up here as well. 34,000 or 4,300 up here, which was taken later on. So yeah, that was, you know, that takes months to pan out. This was from 714 to 816. So that was over a month in that price leg. So for that month, I would be predominantly bullish. Like that's essentially how I'd use that. Does that make sense? But it's not always like that. Okay. Sometimes you'll get a massive decrease in shorts and then we continue lower. So if you tried to go long, you got clapped. But in my most recent turn of events, okay, and this is on my YouTube. If you go to my community tab, I sold all of my stock on the 2nd here, and I had went long somewhere in here. Okay, so think about that for a minute. If I can figure out how to fucking zoom out. Okay, we got a massive decrease in shorts here, and price traded down and into what? A mitigation here. So I went long, price rallies up, clears this high, and takes a high. Man, this fucking whatever high this is over here from the 13th, we took that and then hit 4,200. So I went long, got out, and now we're just chilling like a villain. So that's long-term trading. Now that was margined. I mean, that was not margined. That was pure SPY. So yeah, that's a significant move, but there's no margin on that. So it was just a really cool swing trade. And yeah, I sold it on the second, pretty much at the very top, which is always nice, selling pretty much everything you have prior to a big ass sell-off. That's always really nice. So, you know, not to like brag or anything, but at this point I could likely see 37.89, and that's why we have that on this one, right? Because that 37.89 levels right here, and we have lows at 38.08, and that's only a 20-point difference between the lows from this morning and the low on that daily time frame. So